Hi guys, it's Stock Curry, and I have a major update for you on Crypto.com and whether or not they are safe after the FTX collapse. I also have a major update for you on the stock market, including layoffs, upcoming economic data, and earnings. So let's get into it. I'm going to break this video down into two parts. The first part of this video will be discussing Crypto.com, whether or not they are safe after the FTX collapse, and whether or not Crypto.com is about to go bankrupt. The second part of this video will talk about the stock market, including some major layoffs that were just announced, some upcoming economic data, as well as the upcoming earnings this week. Now, I will go ahead and timestamp the video down below. If you are only interested in the stock portion of this video, feel free to skip ahead to that portion. We are going to start the video out talking about Crypto.com. The CEO of Crypto.com did an AMA on YouTube on Monday and addressed a lot of the concerns that people had about the solvency of Crypto.com. Now, you might recall in yesterday's video how I said I could no longer endorse Crypto.com due to concerns over their staking. Crypto.com used to offer 8% staking, much like FTX did. And it was that staking combined with some very risky leveraged investing that ultimately brought down Crypto.com, BlockFi, Voyager Digital, and Celsius. And I had major concerns that Crypto.com was participating in the same type of risky investments, especially leveraged risky investments, which ultimately could bring down an entire exchange when cryptocurrency starts to fall. However, the CEO of Crypto.com addressed a lot of those concerns today. So what I'm going to do is go over exactly what he said, and then I'm going to give an update as to whether or not I think Crypto.com is safe and whether or not I think they might be facing bankruptcy. So what I'm going to do is I'm just going to read through some of what the CEO said, and we will discuss it. So pulling up my notes here, the first thing that the CEO did is he discussed the differences between FTX and Crypto.com. FTX had about 100,000 customers, mainly derivatives-based customers, the advanced crypto traders. Crypto.com, on the other hand, has over 17 million customers, and these are mainly retail buy and hold customers. Essentially, these are two completely different business models. Now, what brought down FTX was risky trading, specifically leveraged trading. And this ultimately is the same thing that brought down BlockFi and Voyager Digital and Celsius as well. Crypto.com does not trade. They simply facilitate the buying and selling of crypto. They are purely an exchange. They are not traders. FTX used the proceeds from their trades in order to go out and participate in more risky trades. Crypto.com made over $1 billion per year in each of the past 4 years, and they used that money to reinvest in their business and to build a more secure and compliant exchange. Crypto.com said they do not lend to third parties, meaning they don't have counterparty risk like Voyager Digital and BlockFi did with Three Arrows Capital. Now, that was fine and dandy, but it still doesn't address my concern about whether or not Crypto.com was doing their own trading just like FTX was. And what the CEO said is that while they don't have third-party counterparty risk by lending out assets, they still have counterparty risk from other exchanges just by this pure simple fact that every time you buy and sell cryptocurrencies, Crypto.com has to then go out and buy and sell that crypto from another exchange. This is typical. Every single large bank and every single stockbroker in the entire world does this. Every time you buy a stock, your broker has to go get that stock from some other broker. And so every single bank, broker, and exchange is going to have some third-party counterparty risk. Now, luckily for Crypto.com, FTX was a very small exchange. And the total losses from the collapse of FTX was less than $10 million, meaning FTX owed Crypto.com about $10 million just from trades that had been done on the last day of trading. And luckily, that's all it was, a $10 million loss. And when you compare that to the $1 billion per year that Crypto.com generates in revenue, the $10 million is negligible. It's meaningless to the overall business. And so luckily, Crypto.com did not get hurt by the collapse of FTX. Now, regarding how Crypto.com actually makes their money, Crypto.com makes the majority of their money through trading fees that they charge customers to buy and sell crypto. They also make some money from fees that they charge merchants in order to offer cryptocurrency as a form of payment on their websites. But that's a very small portion of their business. The majority of their money is made through trading fees. Crypto.com said that they never used customer funds to trade, and they are currently going through an audit to prove that they have a one-to-one holding of customer assets, meaning that for every single dollar worth of cash and for every single dollar worth of cryptocurrency that customers have deposited, Crypto.com has the exact same holdings in storage in their own wallets. Now, Crypto.com said that the audit that is currently being done, they would love to get that out this week. However, the regulators that are actually auditing Crypto.com, they kind of run at their own pace. So the auditor will get the audit done when the auditor gets the audit done. Hopefully it is done within the next 30 days, but these things take time. And the auditor is obviously far more focused on getting it right rather than speeding things along. So we're just going to have to be patient for proof that Crypto.com does in fact have a one-for-one holding, but the CEO said they did, and the CEO is also said he will prove that within the next 30 days with the audit. Now, the next question for me, and this was a big one, is if Crypto.com is not trading, how are they possibly able to offer an 8% stake on the cryptocurrency? Because every single exchange that offered 8% staking, all of them, what they did is they used the crypto that was staked to go trade, and then they made money off trading, and then they basically just gave a small kickback back to the people who were staking the crypto. But Crypto.com says they never traded. So how are they still able to offer this 8% staking? Well, Crypto.com, the CEO said that the yields are paid out from Crypto.com's revenue. Essentially, he's saying that this is a revenue share model, kind of like dividends. So if you stake your crypto on Crypto.com, you're essentially getting a dividend, much in the same way as if you had bought stock in the company like you would on Coinbase. Now, as revenues fell this year, Crypto.com lowered their yields for staking. The CEO said that they were the first to do so, but it was necessary in order to sustain Crypto.com's business model without having to take on the risk of trading. Unlike FTX, Crypto.com's staking yields are more like a profit share rather than the funds being used for risky trading. So essentially, what the CEO said is they did profit sharing. They were able to do profit sharing at 8% yield on staked crypto. Once the trading volume dropped off this year, they lowered the yield that they were offering on their staked crypto in order to maintain a positive business model and remain cash flow positive. That was kind of shocking to me. I was not expecting him to say that, but I'm glad that's what the answer was. And hopefully the audit proves that to be the case. Now, on one hand, we have the audit showing that they have the number of assets on hand that customers have actually deposited. That's very important to know. One question that was asked is regarding why does Crypto.com have 20% of its reserves in Shiba Inu coin? This was kind of funny to me. The CEO basically said that they don't control what customers buy. They just hold whatever customers buy. And literally 20% of everything that has been bought and held at Crypto.com in the past couple of years has been Shiba Inu. And that's why Crypto.com has 20% of their reserves in Shiba Inu, because customers spent 20% of their money buying and holding Shiba Inu. Regarding a question about has Crypto.com stopped withdrawals, the CEO made very clear that they have not stopped withdrawals, that it's absolutely not true. There have been some delays purely due to the fact that the amount of volume of people wanting to withdraw money has skyrocketed in the past couple of days. So withdrawals are taking a little bit longer than normal just due to a backlog of the workflow, but withdrawals are still processing. Again, they have a 1-for-1 reserve. Every single dollar that has ever been deposited onto the platform, Crypto.com has in cash ready to process withdrawals. So they said they're doing just fine there. Regarding Crypto.com's balance sheet and stability, this was another thing that was important to me, because even if Crypto.com did not participate in risky investments or risky trading, we still have that question of whether or not they're going to be able to remain solvent. And what the CEO said is that they have a strong balance sheet. They do not need to raise funds or go out and get a loan in order to continue to operate. That's great, but it's all word of mouth as far as everything that's concerned here. I'd really like to see that in writing. And luckily, the CEO said they are currently in the works to do a full audit of their balance sheet, and they hope to have that released within the next 3 weeks or so. So obviously, Crypto.com is a private company. And as a private company, we do not have insight into their financials. However, they are going to release their financials in the next 3 weeks. And they're going to release it just like any public company would, fully audited and everything. So we will have as much insight into Crypto.com's balance sheet as we do in Coinbase's balance sheet. And if you recall from yesterday's video, I said that I believe Coinbase is secure, that they are perfectly fine. Nothing is wrong with them. And that has to do with the fact that they are a publicly traded company, and we have very good insight into their financials. Just to give you a little insight into what Coinbase is looking at, Coinbase currently has about $5 billion in cash on hand. That is on top of the $95 billion in customer assets that are currently being held. And Coinbase is losing about $500 million per quarter. They're losing about $500 million per quarter. And if you just do the math on that, the $5 billion cash on hand divided by the $500,000 per quarter that they're losing, that leaves them about 10 quarters worth of cash on hand, or about 2.5 years worth of cash on hand as of the end of the last quarter. So Crypto.com is good through the end of 2020. Sorry, not Crypto.com. Coinbase is good through the end of 2024, meaning we've got at least a little over 2 years left before Coinbase would have to raise any funds in order to continue operating. And because Coinbase is a publicly traded company, if Coinbase does have to raise funds, all they have to do is do a share offering and they can get more money. So I have no concerns whatsoever about Coinbase. I believe they are completely and totally safe. And after speaking with the CEO today, or listening to the AMA rather, of Crypto.com, I feel Crypto.com is probably in the same boat as Coinbase. And in fact, they might even be in a better position, but we're not going to know for sure until we get the results of those audits in about 3 weeks. Now, the final concern that I had for Crypto.com involved their marketing. As you might know, they significantly reduced their marketing spend over the past couple of months. And a lot of people were speculating, including myself, that that might be because Crypto.com was running out of money and they didn't have the money to continue marketing. And what the CEO said was that Crypto.com uses their revenues to market their business. In other words, they don't go out and take major loans. They don't use customer funds to market. They are using the business revenues and reinvesting that back into the business in the form of marketing, as well as reinvesting some of that money back into the business to improve security and well as the overall platform itself. And the reason that Crypto.com slowed down their marketing over the past few months is because their revenues went down. As the cryptocurrency market went into a crypto winter over the past year, obviously trading revenues dropped significantly. And because those trading revenues dropped, Crypto.com slowed down their marketing. And that was to help ensure that they remain cash flow positive and that they are not burning through cash. So that was another great answer for me. Everything the CEO of Crypto.com said today really helped ease my concerns about the platform. Now, I still want to wait about 3 to 4 weeks, see the actual audits myself, and be able to go through the numbers. But if everything that the CEO said is true, is in fact true, then I am completely confident that Crypto.com is perfectly safe and continues to be a great place to buy and sell crypto. Now, all of that said, if these audits do in fact come out and they show that Crypto.com is fine, I'll continue to promote Crypto.com on this channel. I've always liked Crypto.com better than Coinbase because they have way more altcoins than Coinbase offers. And Crypto.com also has lower fees. So for those reasons, I've always preferred Crypto.com over Coinbase. But at this time, I will continue to suggest Coinbase over Crypto.com until we can get a result of these audits and get proof that Crypto.com is in fact safe. Now, regarding any other broker or exchange and whether or not they're safe to buy and sell crypto, there are two things you want to look at. One is, are they publicly available to audit? That is, are they transparent? And can you see that they actually have their customer funds on hand? Second question you want to know is, are they involved in risky trading? Are they using customer funds to trade crypto and risk losing more than they actually make? And if you don't have answers to both of those questions with affirmative, yes, they're publicly accountable and no, they're not trading, then I would say there's certainly a lot more risk there than there would be with a company like Crypto.com that's not trading or a company like Coinbase that's public. So just be careful. As always, the safest place to keep your cryptos on a hardware wallet. I personally use the Ledger Nano X. And if you want more information about the Ledger Nano X, you can buy one at my link that I have on my website. I get a very, very small kickback on that, like 10%. It's like $5 for every Ledger Nano X that gets sold. But it does help the channel out a little bit. So if you want to help the channel out, just use my link to buy one. You can check that out at stockcurry.vip/resources. That's stockcurry.vip/resources. And if you want to open an account with Crypto.com, maybe wait a couple of weeks to deposit, or if you want to use them to buy and sell crypto and then just immediately move that crypto onto a hardware wallet. I've done it many, many times myself. On Crypto.com, I will buy crypto and within probably 2 or 3 hours, just as long as it takes to transfer, sometimes a lot shorter, just depending upon which currency it is. I will have that money on my hardware wallet with no problems whatsoever. So if you are interested in doing that and getting, I think it's $25 in free crypto, you can sign up using my link at stockcurry.vip/platforms. That's stockcurry.vip/platforms. Oh, and one more thing before we move on to the stock market. I also wanted to let you know that CRO, there's a good chance that it has probably bottomed out. It dropped over 50% in the past week. And if you're looking for an altcoin to buy, I think CRO is probably a good one, because once Crypto.com is able to come out with these audits, you could potentially double your money in a very short period of time. So I think Crypto.com or CRO, it's called something else now, but I think that Kronos, that's what it is. I think Kronos, ticker CRO, would be a good altcoin to invest in for a quick profit, just expecting the audits to come out and show exactly what the CEO said that the audits would show. Now moving on to the stock market, we have some important news to discuss. First of all, Amazon.com reportedly plans to lay off about 10,000 employees starting this week. Now, one of the major concerns that a lot of people had on the last earnings call is that Amazon.com said that they would do nothing to reduce costs in this quarter, and now they're coming out with the surprise layoffs. Now, 10,000 employees is a lot. However, you'd have to recall that it only affects 1% of their total workforce. Further, most of these layoffs are corporate layoffs. They're not in their warehousing or distribution centers, and it represents about 3% of total corporate employees. So 10,000 employees is a lot, but it's a very, very small number for Amazon. Also, don't forget that the PPI, or Producer Price Index, is being released on Tuesday before the market opens. This could cause a boost to the markets as well. This should fall in line with the CPI numbers that came in a little bit lower than expected, but who knows? We'll see what happens. I think if the PPI comes in lower as well, then we could see the stock market rally again on Tuesday. One of the main reasons for that is because as the inflation numbers start coming in lower than expected, this gives a lot more credence to the Fed slowing down the rate of rate increases. And Fed Vice Chair Brainerd agreed with Jerome Powell today, saying that it may be soon appropriate to move to a slower pace of rate hikes. This does not mean that the Fed is going to stop raising interest rates. It just means it's very, very likely that the Fed would do a 50 basis point rate hike in December and not a 75 basis point rate hike in December. And that kind of positive talk and positive expectations from the market is causing the market to go up. We saw that massively on Thursday and Friday, had a slight relief breather on Monday, not to be overly concerned about that, since technically the market was pretty overbought. However, a lot of those overbought levels, especially on the 1 hour chart, got resolved today. So I think we're set to continue going up again on Tuesday. Now, the last thing that we need to talk about is earnings. We have quite a few major earnings coming out this week. Tuesday before the open, we've got Walmart and Home Depot. And both of those could move the markets. Those are pretty big companies. They give a lot of insight into the consumer, and they could be market movers on Tuesday. Tuesday is going to be a little bit of a fight between the earnings from Walmart and Home Depot compared to the PPI report coming out. That's the Producer Price Index report. So between the inflation report and earnings, little bit of a fight, but Tuesday, certainly I do expect some pretty big movement in the markets, just depending upon how these earnings and inflation report comes out. Then Tuesday after the close, we got Advanced Auto Parts. Not really concerned about that. But then Wednesday before the open, we've got ZIM. This is a big one. I'm heavily invested in ZIM, so I'm hoping those earnings come out well. The last couple of times ZIM reported earnings, they announced major dividends. And if ZIM can, in fact, come out and report another profitable quarter with another big dividend, we can expect that stock to rally. The PE ratio on ZIM is currently around 0.5. Extremely, extremely low. And there's a lot of upside potential on that stock. We also have Target and Lowe's and TJX, all American retail stores. So this will give more insight Wednesday before the open. Now, Wednesday after the close, we've got some pretty big technology companies, including NVIDIA and Cisco. We also have another retailer, Bath and Body Works. So Wednesday after the close could be another market mover, especially in the NASDAQ. And then Thursday before the open, we get back into more consumer retail stores, including Macy's and Kohl's. Now, neither of those stores have really been doing well recently, so I don't expect good earnings out of either one of those. But we also have Alibaba, and this might provide a little bit of insight into some Chinese stocks. Now, so far, Chinese stocks have not been reporting well. China obviously has had a lot of shutdowns due to COVID, and Chinese consumers seem to be cutting back significantly on their spending. So I would not be surprised to see bad earnings out of Alibaba. And Friday before the open, we also have JD.com, which is another Chinese company. If this video helped you out and you got a lot out of this video, be a good friend and share this video with your friends and family, and hit that like button and subscribe. And if you want more insights into what's going on in the cryptocurrency world, what's happening with FTX, and my thoughts on Coinbase, make sure you watch the last video that I uploaded here.